Hi guys, welcome. This is the second installment of the tutorial session by the UP Junior Philippine Institute of Accountants. So during the first module, you discuss the accounting process from the preparation of the financial statements up from journalizing entries rather up to the preparation of the financial statements. So starting this module, we will be discussing different um, line items in your financial statements. For Module 2, we'll be discussing inventory or cash. Before we begin, I would just like to make a disclaimer that in case I say something that is quite contrary to what you learned in class, I hope that it's clear, no, that you'll follow whatever you learn in your respective classes. We follow our professors. So this video will be divided into two. The first part will focus on theory and the second part naman will focus on short problems. So let's start by discussing the first item of the theory. So the first question talks about inventory as a concept. In simplest terms, inventory is something that you sell in the ordinary course of business. When we say in the ordinary course of business, it's habitual. You usually engage into selling those things. Hindi lang siya minsanan, lagi mo siyang ginagawa. So, in case of a merchandiser, yung inventory nila usually finished goods 'yan. For example, sa sari-sari store, kapag bumili sila sa supermarket, kung ano yung binili nila, yun din ibebenta nila. Hindi na nila pina-process further. But the story is quite different naman kapag inventory of a manufacturer. Sila binibili nila, for example, raw materials, and then they will be hiring people to work on those materials, no, for them to be transformed into finished goods. So for BA 99.1, focus lang tayo sa mga inventory ng mga merchandiser, for example, sari-sari stores, no? And then for inventory of a manufacturer, sa BA 116 naman siya cost accounting. Sila naman yung like let's say the inventory of Procter and Gamble, Unilever, etc. So for the first item, inventories encompass all of the following except merchandise purchased by a retailer, ito yun, finished goods yan. So that's not the answer, no? Because um the keyword here is except, meaning we're finding the item that is not considered as inventory. Letter B, finished goods produced. Ito naman yan, produced meaning finished goods na ginawa mo. So inventory naman yan ng manufacturer. So hindi pa rin yan yung sagot kasi nga we're looking for the exception. Letter D, let's go to letter D. Materials and supplies awaiting use in the production process. Ito naman yung raw materials mo. So the answer for this item is C, no? Land and other property in use in operations. So if hindi siya inventory, you might be asking yourselves, how do we account for it? I think you already met the word PPE or property plant equipment. Doon siya maklasify yung land and other property used in operations. Why? Because as mentioned, you don't sell your land and other property used in operation during your ordinary course of business. Yes, mabibenta mo siya, no? For example, pag di mo na siya ginagamit. But it's not something that you do usually. It's not habitual, therefore not inventory. The story is different when you talk about the land and other property of a real estate company. For example, Camellia Homes, yung land and other property nila, hindi na yung PPE. Usually inventory na yon because they sell those houses of the subdivisions in the ordinary course of their business. Therefore, accounted for as inventory. So I hope that's clear. So for second item naman, we're talking about how inventory is costed. How do we get the cost of inventory? Um, According to the standards, we're only allowed to use two cost systems, no? That's letter A, FIFO method, or letter B, average method. Therefore, the answer for this would be letter D, either A or B. The standards prohibited the use of LIFO method. Basta hindi natin siya pwedeng gamitin. It's either FIFO or average method. Kapag average method, it depends pa if you're using perpetual or periodic inventory system. If it's periodic inventory system, mas madali because you're going to get the parang weighted average cost, right? Unit cost. But if it's perpetual, it's quite more difficult to a certain extent because we're computing the moving average. So as we purchase, the average unit cost changes as well. So just to give no, just to recall your memory. So whenever you purchase inventory, it's either mabebenta mo siya or di mo ba siya mabebenta. Those things or those inventory that you'll be able to sell, mare-reflect yon sa income statement mo via the CGS account. Yung hindi mo naman mabebenta, yun yung matitira, it will be reflected in your ending inventory, which will appear naman on your statement of financial position or balance sheet. So if it's first in, first out, unang pumasok, unang lalabas. Therefore, early purchases will be reflected as CGS, last purchases will be reflected as inventory. It's the reverse for LIFO. Last in, first out. Last in, unang lalabas or unang mabibili. Last purchases will be reflected in your income statement, again through your CGS account or cost of goods sold account. Your early purchases will be reflected naman in your inventory, ending inventory, to be reflected on the face of your balance sheet or statement of financial position. I hope that's clear. Number three, how do we compute for net realizable value? The answer here is letter D, no? Estimated selling price less estimated cost to complete and estimated cost of disposal. So as you can see, no, as you, it's usually estimated. The companies usually just estimate those items because futuristic sila eh. Yung kung magkano mo siya mabebenta, ano yung ma-incur mo if you decide to further process it, should you dispose it. Those items are estimates. And of course, when we estimate things, it should be reasonable depending on the surrounding circumstances. Just to give an emphasis or clear understanding. We measure inventory, no? We all know naman, at the lower of cost and net realizable value, such that if your cost is 100, your inventory and your NRV is 80, what's the lower amount? It's 80. Therefore, we recognize a write down amounting to 20 because in your books, it's recorded at 100. Nung binili mo siya, ni-record mo siya at 100. Now, i-present mo na siya lower of cost and NRV, i-present mo siya as 80. Therefore, yung 100, bawasan mo ng 20 para maging 80. I hope that's clear, no? And that 20 will be accounted for as write-down. How about, if your cost is 80, nung record mo siya, 80 peso, and then, at the end of the period, yung NRV na niya, assuming na hindi mo pa siya nabebenta, is 100. Again, what's the rule? It's the lower of cost and NRV. So therefore, kung ni-record mo siya as 80, i-record mo pa rin siya sa 80. So there should be no adjustment. Yung 20 peso, the difference, you don't recognize that as a gain, no? You don't recognize that as a gain. When you go to BA 114, you'll be able to learn that this write down of 20 peso can be reversed in the future, no? But sa 114 nyo pa yun matutunan. For now, what's important is that you measure your inventory at the lower of cost and NRV. If the NRV is lower than your cost, you record a write down. But if your cost naman is greater than your NRV, when your cost naman is lower than your NRV, you don't recognize the gain, the supposed gain. You just ignore it. You still measure it at cost. Again, lower of cost and NRV. For number 4, under the periodic inventory system, the formula usually being used in computing for the beginning inventory is. So how do we this is like the income statement, no? Actually, not income statement, the determination of CGS. So you have your inventory beginning, and then you buy, of course, things, your net purchases, and then you have your freight in. If you add these three items, you'll be able to get your cost of goods available for sale. And then, magbilang ka, bibilangin yun, madidetermine inventory ending. So, kung ito yung available for sale mo, at ito na lang yung natitira, meaning, yung difference niyan, yun yung nabenta mo. That will represent your CGS, your cost of goods sold. Now, just to give additional insights, when we compute for our net purchases, di ba usually you encounter terms 2, 10, and 30. So 2%, that's a discount, cash discount. So as far as I remember, if the problem is silent, what's the assumption? Does the company avail of the discount or not? Of course, no. I think the more logical assumption, if there is no evidence to the contrary. The more logical assumption is that the company avails of the discount kasi makasave siya ng pera doon. So, let's say kung 100 peso yan, tas may 2% na discount, we record the net purchases at 98. How about the freight in? Kapag freight in naman, yung freight in is makakonsider lang siya as inventory if the term is FOB shipping point, no? What, meaning, kapag yung goods are in transit, tas FOB shipping point yung term, and you are the customer, you should be able to include that freight in as your inventory. If it's FOB destination, it's not your inventory because who should shoulder the freight in or the freight of the goods in transit when the term is FOB destination? It should be the seller. So wala kang paki doon. That would be accounted for as the delivery expense of the seller. From your end, you just simply ignore that. So you only account for freight of goods in transit when the term is FOB shipping point, no? FOB shipping. So what would be the answer for this? So isa-isahin natin. Letter A. Let's see what's the answer. Letter A. Let's assume that your inventory beginning is 0. For simplicity lang, let's assume that your inventory beginning is 0 and your freight in is also 0. So therefore, your cost of goods available for sale is just your net purchases. So number 1, your net purchases minus CGS, or your cost of goods available for sale minus your CGS, is what? It's just your inventory ending, no? Kasi nga, yung binili mo, it's either mabenta mo siya, CGS, or di mo siya mabenta, inventory ends. For letter A, it actually refers to your inventory ending. For letter B, it's the reverse, no? Net purchases minus ending inventory is actually your CGS. So it's not the answer again. For letter C, total goods available for sale minus your CGS, yung lahat ng pwede mong mabenta less sa nabenta mo, it refers to your, this should be your inventory ending. Inventory ending. All right. Now, the answer for this item is letter D. Total goods available for sale minus net purchases is your inventory beginning. No? Meaning, lahat ng pwede mong mabenta is equal to kung ano yung meron ka at the start of the period and those purchases that you made during the period. So meaning, let's assume that freight in is 0, inventory beginning plus net purchases is equal to cost of goods available for sale. So via transposition, for you to get your inventory beginning, you just simply deduct your net purchases from your cost of goods available for sale. So for this item, the answer is letter D, no? Letter D. I hope that's clear. Ito, 4, very na siya, na emphasize natin siya earlier. So inventory shall be measured at the lower of cost and NRV. So how do we compute for cost of inventory? It's the invoice price. And as mentioned, if there's a discount, we assume that the discount is taken or availed of by the entity, no? Because that would tantamount, no? Because if the entity would not avail of the inventory, of the discount rather, then it's like you're throwing the savings that you could get from paying early. So we assume that the company avails of the discount if there is no evidence to the contrary. And then we add freight in, no, if FOB shipping point. NRV, as emphasized in the previous question, it's estimated selling price minus estimated cost to complete minus estimated cost to sell. Number 6, which of the following accounts is not considered in the computation of net sales? I would just like to emphasize that this will be emphasized in module 3 when you discuss accounts receivable, but because for this module, no, you are focused just inventory and cash, no, so walang pumapasok na sales doon, no, AR. But for this item, an answer is letter B, freight out, because again, freight out is Another term for freight out is delivery expense. So delivery expense is not reflected in your net sales. So how do we compute for net sales? Again, this topic will be discussed, I think, in Module 3 when you discuss AR. But for the sake of discussing, let's discuss this. So how do you compute for net sales? It's gross sales minus sales discount minus sales returns minus sales allowance. And when you get the net amount, you'll get net sales. So, also just to give further insights or additional input, but I don't think it will be covered in the exam because it's out of scope. What's the difference between your sales discount, sales return, sales allowance? Sales discount, di ba kapag ikaw yung bumibili, merong purchase discount. Yun yung discount na nasi-save mo or na-avail mo because you're paying early. From the perspective naman of the seller, sales discount na yon. Kasi imbes na let's say maka-collection 100, the entity will just be able to collect 98 peso because the entity gives you 2 peso discount. So that's the sales discount because you pay early. That's your reward. Now, the more interesting is the difference between your sales return and your sales allowance. Sales return, binalik ng customer. No? Ayaw na niyang bilhin. So sales return yun, binabawas yun. So what the different, ano naman yung sales allowance? When you say sales allowance, usually it's a diminution in the price, meaning babawasan na lang yung i-charge niya sa'yo, pero hindi mo na siya i-return. Kaya pag sales return, binabalik yung good. There's an actual return of the inventory. Kapag sales allowance, the inventory remains in the custody of the customer. It is just that the seller will provide that customer an allowance. Let's say, for example, if originally 200 peso yung bill ni customer, the supplier or the seller will just probably say, okay, I'll just give you, don't return the good kasi for example, damage siya. I'll just give you 5 peso discount. So, magkano lang yung babayaran ni customer or ni buyer? It will be 195. 200 minus 5, 195. So again, this will not be I think will not be asked for this module but rather be given emphasis in module 3. Ayun. Now, what's the difference between sales return and sales allowance? For number 7, freight term expressed as FOB shipping point means that, so let's discuss. FOB shipping point versus of FOB destination. If it's FOB shipping point, ask yourself, who is the owner of the goods while in transit? Kapag FOB shipping point, the owner of the goods while in transit is the buyer or the vendee, the customer. Kapag FOB destination naman, the owner of the goods while in transit would be the seller or the vendor. Therefore, kung sino yung owner ng goods while the goods are in transit, he or she should be the one who should shoulder the freight. For example, kapag under FOB shipping point, si buyer yung owner of the goods. Therefore, it's the buyer who should pay the freight. So what's the treatment? Si buyer, kinakapitalize niya yan as freight in, di ba? Kung periodic system, the buyer will debit freight in and will credit, for example, accounts payable. Pero kung cash basis naman, debit freight in, credit cash. If it's FOB destination, it should be the seller who should shoulder the freight. And the seller accounts for it as a freight out or delivery expense. So the seller will debit freight out and credit, for example, cash. No. Now, in your BA 114 or in higher accounting subject, the complication there is that, diba, for example, for FOB shipping point, the one who should shoulder the freight should be the buyer. But then, in some circumstances, prepaid yung freight, meaning it's paid in advance by the seller. Yun, may different accounting treatment naman for that. But it's not covered in this module. It's enough that you know because the owner of the goods in transit and what's the treatment for each case. So let's go to the choices. Letter A, buyer must bear the freight cost. It's correct, no? Because if it's FOB shipping point, it's the buyers, the owner of the goods while in transit. Therefore, it's the buyer should shoulder the freight cost. Letter B, buyer must debit freight out. No. Because nga, the treatment is that it is capitalized, meaning it forms part of the inventory of the buyer. So how does the buyer account for that? The buyer will debit inventory if the buyer uses perpetual system, or debit freight in if the buyer utilizes periodic system. Letter C, seller must debit freight out. Wrong. Kasi nga, as a general rule, kapag FOB shipping point, si buyer ang magbabayad. So, walang paki doon si seller. So, C is wrong. No? So, ito yung sinasabi ko kanina, 'di ba kapag FOB shipping point, it's the buyer should shoulder the freight. But then there are some instances wherein the seller will pay the shipping company advance. So, mag-credit siya ng cash. Anong ide-debit niya? Hindi yun freight out. Kasi nga, hindi naman siya dapat yung mag-shoulder noon. Kasi nga, FOB shipping point eh. So, it's actually a receivable from the customer. So, this item, you just simply ignore it. No? Just simply ignore it. This is just an additional insight, but this should not be, I think, should not be covered by your exam because it will be discussed in 114. But this is the accounting for that. It's not freight out, but rather receivable from the customer because legally and technically, it's the seller who should shoulder. It's the buyer rather who should shoulder the freight. Letter D, seller must pay the freight cost. No, it's the buyer should shoulder the freight cost. Okay. For letter A credit term 2, 10, and 30 means that ito medyo madaling item. The only thing that you must note is that in every question, no, the devil is in the details. So you just go through the choices. But the answer for this is, yes, you're right, it's letter C. A 2% cash discount will be received if payment is made within 10 days, 2/10, from the invoice date. Otherwise, the full amount is due within 30 days. Baka nagmamadali ka, no? Nakahanap ka ng 2% cash discount sa letter B, B na yung isagot mo. But it's wrong. Why is B wrong? Because it says here, otherwise, the full amount is due at the end of the month. It's wrong, no? Because if it's at the end of the month, it should have been N/EOM, right? S/EOM. Because hindi naman lahat ng month, because it's N30, no? 30 days, not end of the month. So the answer for this is letter C. Okay. So let's go to number 9. So we already discussed this. So let's just re-emphasize the point. If an entity utilizes the FIFO method of inventory costing, the most recent purchases are assumed to be reflected in the, so yung kapag FIFO, first in, first out. Unang pumasok, unang mong mabebenta. So yung mga most recent purchases mo or yung mga huli mong binili, sila yung hindi mo mabebenta. Therefore, they will appear in your balance sheet as part of your, yes, you're right, ending inventory. So the answer for this is letter A. In the balance sheet as part of your ending inventory. I hope that's clear. Number 10. Which of the following goods in transit as of the balance sheet date would most likely not be included in an entity's inventory? So, end of balance sheet date, and then you have inventory in transit. Which of the following items will not be included in your inventory? So we'll discuss this this framework earlier. So let's do this one by one. If it is goods sold and FOB shipping point, goods sold meaning ikaw yung seller, binenta mo, FOB shipping point, inventory mo pa ba? No, because if binenta mo and it's the term is FOB shipping point, the owner of the goods in transit would be the buyer. So it's no longer the inventory of the seller because we're talking about the goods sold. So it's from the perspective of the seller. If it's goods sold FOB destination, yes, it's your inventory. It's still the inventory of the seller, no? Because it's FOB destination. How about goods purchase FOB shipping point? Purchase, so nasa perspective ka naman ni buyer. Goods purchase FOB shipping point, yes, no? It's your inventory. How about goods purchase FOB destination? Again, nasa perspective ka ni buyer, FOB destination, hindi mo pa yan inventory. Inventory pa yan ni supplier or ni seller. So it's no. So let's do this one by one. Goods sold, FOB destination. Inventory mo ba? Goods sold, FOB destination, no, no. Sorry, FOB goods sold, FOB destination. Is it your inventory? Yes. How about goods sold, FOB shipping point? Is it your inventory? No. So the answer for this item is letter B. Why is C incorrect? Goods purchased whether FOB destination or FOB shipping point. Oh, it's partly true because if it's goods purchased, it would not be included in your inventory if the term is FOB destination. So this is partly correct lang, no? So this is not the best answer. The best answer here is letter B. Goods sold, FOB destination. Again, this is not part of your inventory. Goods sold from the perspective of the seller to, FOB shipping point nasa custody na yan or ownership na yan ni customer. So it's not part of the inventory of the seller. So the answer for this is letter B. All right. Um, Number 11 is interesting. It talks about the error. No? What would happen if ending inventory was overstated? During my undergrad, I used to analyze this question, more to talk or more focused. But then I learned from a reviewer that's credit to Sir Rain that we can actually use your assets is equal to liabilities plus equity in analyzing this question. Okay. So your assets is equal to liabilities plus equity. So your inventory ending, it's part of your assets, right? It will be presented in your statement of financial possession. How about your inventory beginning? This usually kapag FIFO, itong inventory beginning na to, mabebenta na siya, right? So kung mabebenta na siya, nasa cost of goods sold na siya, which in turn will be close to your income summary, which will later on be close to your equity account. So andito siya sa equity. The same is true for your net purchase and freight in as a general rule, no? Kasi nga all the things that you have, your cost of goods available for sale, because if you add your net beginning, no? Because again, your inventory is either nasa asset mo lang siya or nasa CGS mo na siya. So itong inventory and asset mo. Yung the rest will be reflected in your CGS, no? Which will later on be close to your income summary and then transferred to your equity account. Okay. So, let's do the accounting equation now. If your inventory ending is overstated, again, if it's inventory ending assets, so overstated. For your accounting equation to be balanced, if overstated yung assets, therefore overstated din yung equity. Kasi 'di ba? The equation is assets equal to liabilities plus equity. Now, you're overstating your inventory ending, meaning you're overstating your assets. If you want to balance the equation, if you want to balance the equation and you overstated the assets, therefore you're also overstating the equity. An overstated equity means an overstated net income or understated CGS, right? How about if it's overstated inventory beginning, overstated net purchases, overstated freight in? Again, itong three items na to, overstated inventory beginning, net purchases, freight in, 'di ba? From this framework, andito siya sa equity side. So usually, itong inventory beginning mo, net purchase, freight in, it'll be considered in your in the determination of your CGS. So if you overstate these things, no, para mo na ding na overstate si CGS. No, overstate si CGS, which will consequently understate your net income or understate your equity, right? So again, if you overstate your inventory ending to balance the equation, you're overstating the equity. An overstated equity means an overstated net income or understated CGS. How about if you understate your ending inventory? If you're if you understate your inventory ending, for the equation to be balanced, it means that you are also understating your equity. If you understate your equity, it means that you overstate your CGS or you understate your net income. And for your overstatements of your inventory, net purchase freight in, if you overstate these items, your CGS will also be overstated, your net income will be understated, your equity will be understated. If you understate naman these three items, it's the reverse, no? You'll be understating your CGS, overstate your net income, and overstate your equity. So, what would happen if ending inventory was overstated? Letter A. Cost of goods sold for the current year would be overstated. Again, if ending inventory is overstated, asset is overstated, equity is overstated, an overstated equity means that your cost of goods sold is understated. So letter A is not the answer. Letter B. Net income for the current year would be overstated. Let's analyze it again. An overstated ending inventory means an overstated assets. For you to balance the equation, you must also overstate your equity. An overstated equity means that your net income is overstated. So the answer here is actually letter B. No. Letter C, sales for the current year would be overstated. Again, no, there's no connection because sales will affect your other account, your accounts receivable particularly, but not your inventory. And letter D, accounts receivable for the current year would be overstated, also wrong. So the answer here is letter B, net income for the current year would be overstated. I hope that's clear. Number 12, no? It's just a repetition of the concept. Goods in transit shall be included in the inventory of the, let's do this one by one. Buyer, when the freight term is FOB destination. Is that true? Buyer, when the freight term is FOB destination. If it's FOB destination, the owner of the good in transit should be the seller, right? So this statement is wrong. Letter B. Buyer when the freight term is FOB shipping point. Ooh. If it's FOB shipping point, who's the owner? It's the buyer. So check. Let's do to the second part. Seller when the freight term is FOB destination. FOB destination is the owner of the goods in transit. Yes, it's the seller. So the answer here is letter B. Buyer when the freight term is FOB shipping point. Seller when the freight term is FOB destination. I hope that is clear. Okay. 13 talks about the periodic inventory system, but let us discuss the difference between the perpetual and periodic system. If it's perpetual, when you purchase inventory, you debit inventory, your credit AP. But if it's periodic, you don't debit inventory, but you just debit it purchases and then your credit AP. Why? Because theoretically, under the periodic inventory system, you will only be able to know your inventory and your CGS at the end of the accounting period. Pag perpetual, alam mo kagad kung magkano kasi you're maintaining an inventory account and a CGS account. How about if there's freight in? Again, freight in. If it's perpetual, again, you debit inventory, you credit cash. Or if hindi mo siya bayaran, it's accounts payable. If it's periodic, you don't maintain inventory account, usually. You debit it to freight in and you credit it to cash. If it's sales, no? Again, when it's sales, from your first module, when you sell something on account, for example, you debit AR and then you create sales. But the focus here is the accounting for the inventory, no? Pag perpetual, you debit CGS or cost of goods sold, you credit inventory. But for periodic, you don't have that entry kasi the CGS again will be determined at the end of the period. So during the inventory count, assuming that the inventory balance in your books is corresponds to the inventory count, meaning kung ano yung nasa record mo, yun din yung talagang meron ka based nung binilang mo yung inventory mo. Under the perpetual system, there would be no entry, no? No adjustments. But periodic, there would be an adjustment. Why? Because you'll be presenting your financial statements. Therefore, you have to present your inventory ending and your CGS. Eh wala ka pang inventory and CGS account books mo, 'di ba? So you have to recognize that. So kapag nagbilang ka, nag-inventory count ka, you'll be able to determine your inventory ending. So you debit your inventory ending. Tapos um tapos 'di ba may nag-debit sa accounts mo, may inventory beginning ka, right? What's the normal balance of an inventory? Debit, right? So if you want to cancel out your inventory beginning na naka-debit, you credit it. If you want to cancel out your purchases, you credit it. If you want to cancel your freight in and naka-debit, you credit freight in. Again, how do we call this? The inventory beginning plus for purchases and freight in is the cost of goods available for sale, right? Diba? It is your cost of goods available for sale. And like what I mentioned earlier, your cost of goods available for sale will only be classified either into accounts. Either mabenta mo siya or hindi. Kaya itong naka-credit mo, either mapupunta siya sa inventory ending mo, nalalabas sa balance sheet, or mapupunta siya sa CGS mo, nalalabas naman sa income statement. So I hope this is clear. Okay. 14. Which of the following inventory cost flow assumptions would generally result in the highest income in a period of sustained inflation? When you go to economics, microeconomics, or I think macroeconomics, you'll define inflation as a continuous increase in prices. So the answer here is what? Is letter A, FIFO method. Why is that so? I think the focus here is that is more on the CGS account. Kasi take note, the premise here is that there's an inflation, meaning the prices are increasing. Okay. Let's say, for example, that you bought goods in January costing 10 peso. And then you bought goods in February costing 15. March costing 20 peso. So if it is first in, first out, early purchases, and your prices are increasing, meaning, saan dyan yung magiging CGS mo? It's the January, di ba? Therefore, yung mapupunta sa CGS mo kapag FIFO, again, first in, first out, early purchases, so cheaper. Meaning your CGS mo, mas mababa. Pag LIFO naman, last in, first out. The last purchases will be assumed to be first, to be the items that will be sold, no? Or that are sold rather. So last purchases, ito naman siya sa 20. Kaya yung mapupunta sa CGS mo, mas mahal, more expensive. And therefore, sino yung mas mataas yung income? It's the FIFO because it's cheaper early purchases, lower CGS, higher income. Kapag LIFO naman, in the period of inflation, last purchases, more expensive, higher CGS, lower income. Which is why for this item, the answer is letter A, FIFO method. So I hope that this is that's clear. Number 15. Which of the following inventory cost flow assumption would be ideal for low quantity? So low quantity, high value items. Usually it refers to your like example your jewelry or high-end luxury bags like Louis Vuitton, etc. The consideration here is your cost versus benefits. As long as the benefits of adopting this particular system exceeds your cost, then I think it would be justifiable to implement this method. And this method is actually the specific identification method. Why? Because under the specific identification method, you'll be able to, from the name itself, you'll be able to specifically identify the goods that are sold and the goods that are left unsold. So, mas mataas yung accountability, mas ma-account mo yung inventory mo. Which is why if it's low quantity, high value items, very material amounts yung nakatali or nako-correspond din sa inventory mo, it would be more advisable to apply the scientific or the specific identification method. Number 16. Which of the following, we're done with inventory. Let's now proceed to cash. No. Which of the following is not generally considered to be a basic characteristic of an effective internal control system concerning cash? So let's do this one by one. A, the use of a voucher system. Yes, no, it's a good method because under the voucher system, ito very apparent siya under the petty cash fund, right? We have the Impress system wherein you have vouchers such that if may voucher system doon sa Impress system is actually a control for cash. Like letter B, regular deposit of cash received, meaning all your collections during the day, at the end of the day, you deposit right away, no, to the bank. Is it a good control? Yes, because again, cash is king. It's very high. It cash means higher risk because it's vulnerable to theft. Therefore, it would be more advisable to deposit right away the cash, no, at the end of the day. Letter D. Let's go to letter D. Internal audit at regular intervals. Yes, no? It's also a good internal control system pertaining to cash. Why? Because if you're doing internal audit, meaning there's, let's say for example, you will be counting your cash. It would be advisable to do it irregularly so that there will be an element of surprise. Why? Because if you'll do it regularly, let's say you'll count your cash every Friday afternoon, then your employees will be able to determine that, oh, our boss will be counting the cash items at Friday afternoon. So in case I will be stealing money, I won't do it on Friday morning. Rather, I will do it on Wednesday afternoon, let's say, because they know when you will conduct the internal audit or the, for example, the cash count. Letter C, that's the answer, no? The combined responsibility for handling and recording cash. That's an effective internal control. Why? Because it violates the principle of SOD, or the segregation of duties. Under the principle of segregation of duties, there are functions, incompatible functions, that shall not be vested upon the same person. During when I was studying during our BA 120.1, it's actually just CAR, meaning custody authorization recording. Meaning, um, yung taong may hawak ng pera, hindi siya dapat yung nag-authorize kapag may kailangang bayaran. Hindi din siya dapat yung taong um, nagre-record ng pera. Dapat it pertains to different person, no? It should refer the task or the duty should be given to different individuals. But during review, they say that it's now care because execution. These are the duties that should be separated. No? Ideally, theoretically, iba yung may hawak ng cash, iba yung nag-authorize, iba yung nag-record, iba nag-execute. Because this duties, theoretically, are incompatible. Now, just to give additional insights, kapag, let's say for example, small company lang, or it's like a company which, because of scarce resources, limited resources, can't able um, to hire different people. Because why? Because iba-ibang tao yan eh, but they can't hire different people. So segregation of duties seem not to be practical for them because, 'di ba, as mentioned, the benefit should outweigh the cost. So what's the compensating control for that? Probably the manager would just supervise the employees, no, instead of having the segregation of duties. But usually in big companies, they utilize, or they adhere to this principle of SOD. You'll learn this when you go to your auditing theory naman. So it's more of like just a bird's eye view, or just um, a glimpse of what's gonna happen next. Um, le- um, Number 17. Which of the following would not be considered cash? Isa-isahin natin. Post Post dated check receive. Is this cash? Meaning the company receive check that is post dated. Meaning, for example, I'm the company and my customer gives me a check. So today is, based on my calendar, it's November 10. November 10. Let's say that the check is dated December 23. Is it cash? From my end, no. From my perspective, it's not, because if I go to bank right now and I encash it to the bank will say no. The bank will not honor the cash because it's post dated check. I can't encash it. I can't use it. And from the very definition of cash, you should be able to use it, no, without any restriction. Therefore, it's not yet cash, no. It's still a receivable. Receivable mo pa lang yan. Come December 23, that's the time that it'll be accounted for as cash. How about PDC issued? Ito naman, different perspective. Ako naman yung nag-issue ng post-dated check. no? Is it cash? Yes. Kasi hindi pa yan cash ng pinagbigyan ko. Kung hindi niya pa yan cash, kaninong cash yun? Hindi din sa cash ng bank. Cash ko yon. Post-dated check issued. Kasi hindi niya pa pwedeng ma-encash yun. So habang hindi niya pa pwedeng i-encash, akin pa yon. It's either sa kanya lang yon or sa akin. So if hindi sa kanya, sa akin yung cash. So again, if it's post-dated check received, it's not your cash. If post-dated check issued, ikaw naman yung nag-issue, it's your cash. How about unissued checks or undelivered checks? For example, the day is today again no is November 10. The date of the check is November 10. But then I haven't delivered yet or I haven't issued yet the check. Is it cash? Is the check my can I consider the check as my cash item? Yes, no, because I haven't delivered or issued the check yet to the um to let's say for example to my supplier. So dahil hindi ko pa ba siya ma-deliver, hindi ko pa siya na-deliver, hindi ko pa siya na-issue, hindi niya pa pwedeng encash yun. Therefore, similar to PDC posted a check issued, kung hindi niya pa ma-encash, hindi niya cash yun. So kung hindi niya cash, aking cash yun. Sa akin, yung unissued checks. So, number 17, which of the following would not be considered as cash? Posted check received, is that your cash? Again, no. So the answer is letter A. So personal checks received, travelers check received, cashier's check received. This are this would be accounted for as cash, no? This terms no will you'll further discuss this when you go to your law subjects. What's the difference between a cashier's check and a manager's check? What are the legal consequences of issuing them? But for now, it would be sufficient to know that they would be accounted for as your cash. Number 18. We're doing the bank reconciliation. In preparing a monthly bank reconciliation, which of the following items would be added to the adjusted bank statement balance to arrive at the correct cash balance? So in doing the adjusted doing the bank reconciliation, I usually just follow this method. Some students or some book authors would have different method. For example, they would start from the cash to bank and then cash to book, or starting from cash to bank to cash to bank to cash to book, then cash to book to cash to bank. But from my end, I usually just follow these methods. I won't get lost. I always follow this thing: cash balance per bank to adjusted cash balance per bank, and then on the other side I have my cash balance per book, and then I have my supposed adjusted cash balance per book. Now, these two items, cash balance per bank and cash balance per book, they often, no, if not always, they will not equate because of reconciling items. But it's sure, no, you should be able to balance them out. At the end of the reconciliation, the adjusted cash balance per bank should equate to your adjusted cash balance per book. So what are the reconciling items? So for the cash balance per bank, you add the deposits in transit, right? Because this deposit in transit, CP means current period. Because this deposit in transit are already recorded in the books of the company, but they have not yet been recorded by the bank. Why? Because, for example, clearing time issues. So, hindi na siya na-record kasi cut-off time na. So, i-add mo siya sa bank kasi hindi pa siya na-record ni bank. How about the outstanding checks for the current period? The check has already been issued by the company. It's just that hindi pa siya napapa-encash ni let's say for example ni supplier, yung taong pinagbayaran mo. Hindi pa siya na-record ni bank, so dapat i-deduct mo. And then you adjust bank errors as the case may be, and you arrive at the adjusted cash balance per bank. And then on the other column, you have your cash balance per book. So you add your credit memos. Your credit memos would usually constitute your note collection, meaning, for example, sabi mo kay bank, oh, I have a note receivable from this person, and this person instead that person will pay me directly. That person will remit the payment to you, bank, no? So the bank collects the note, but then uh, you were not able to record that because you'll be able to know the note collection only at the end, no, when you receive the bank statement. So this credit memo is not yet reflected in your cash balance per book kasi hindi mo nga alam na nako-collect si bank. So you add it. The same is true for debit memos. For example, bank service charge, no? You'll not be able to know the bank service charge. You'll only know it at the end of the period. So if hindi mo pa na-record yung bank service charge in your books, you should deduct it. Tapos for book errors similar to bank errors, you adjust it correspondingly. So you might be asking, theoretically, the adjusted cash balance per bank should equal to adjusted cash balance per book, such that if this is 20,000, this should also be 20,000. Now, are there instances wherein the adjusted cash balance per bank is not equal to the adjusted cash balance per book, even if you did your reconciliation perfectly? The answer is yes, no. So if that is the case, which record do we follow? Is it the bank or the book? From what I can remember, you should follow the bank. Why? Because banks usually they have more intricate systems. Um, siguro mas mataas yung control nila in terms of recording. So there's a less probability that bank will commit the error. Most probably it's the company which committed the error. So if in case, no, but I don't think this will happen. In case the adjusted cash balance per bank will not be equal to the adjusted cash balance per book, then you use that adjusted cash balance per bank. But I think in BA 99.1, lagi namang nagbabalance yan. When you do your auditing, may chance na hindi mag-balance. But for the sake of BA 99.1, this adjusted cash balance per bank and adjusted cash balance per book should equate each other. So just to give a recording, so because what's the difference between the bank credits my account, the bank debits my account? Okay. So when you deposit cash to the bank, in your books, what you'll record, how do you record it? When you deposit to the bank, you will credit your cash and you will debit CIB or your debit or um, cash in bank. The bank in turn will receive your cash, it will debit cash, and later on it will credit deposits A, no? Deposits, let's say your name is A. Deposits A. This deposit is actually a liability of a bank. Between you and the bank, there's a debtor-creditor relationship. Meaning, yung cash na tanggap ni bank, hindi niya cash mo yon. So from his end, from bank's end, it's a liability, no? Kaya when we say that the bank credits your account, it means that your account increases. The bank will credit your account. Your account will increase, no? How about if you issue check? If you issue check, you will debit your credit cash in bank, you'll debit accounts payable, for example. And then the bank, babawasan niya yung cash mo, credit cash, debit deposits A. Which is why, or let's say just your account, no? Account A. Account A. Which is why when we say that the bank debits your account, it means that the bank is reducing the balance of your account. So don't confuse the two, no? Kapag sa book mo, when you debit your cash, sa book mo, when you debit your cash, it means that you're increasing your cash. But from the perspective of the bank, for the bank to increase your account, the word used is credit. It credits your account to increase your cash. The bank debits your account to reduce your cash balance. Pag note collection naman, the bank again will receive cash and it will credit your deposit. Kaya nga kapag may credit memo, right? Note collection is a credit memo. The bank will credit your account. Okay. So going back, sorry, my laptop turned off. So, which is why, again, going back, if it's note collection, it's a credit memo. The bank will credit your account, but then you haven't recorded it, which is why your credit memos, you add them to your cash balance per book. And then, how do you record it? You debit your cash in bank and you credit your notes receivable. If the bank charges you a bank service charge, the bank debits your account. The bank reduces your cash in bank balance, which is why your debit memos, you deduct it from your cash balance per book. And then the bank will debit your account. Let's say, for example, the account A, no, account A, and it will credit income. No, it's the income from the bank's perspective. How about the bank service charge? For bank service charge, how do you record it? If it's the income of the bank, from your perspective, the man, it's your expense. You debit the bank's service charge, and we credit your cash in bank. So for this item, in preparing a monthly bank reconciliation, which of the following items should be added to the unadjusted bank statement balance to arrive at the correct cash balance now would be added to the unadjusted bank statement balance. So what do we add? It is deposits in transit. So the answer here is letter B. When you go to uh, when you go to higher accounting subjects, usually for the DIT and outstanding check, it's just current period, no. But when you go to 114, it will now be 2 periods. But for this, for now, it will be sufficient to know that deposits in transit during the current period will be added to your cash balance per bank, while outstanding checks will be deducted for cash balance per bank. Sorry, there's an undergoing repair. Um, there's um, there's a question here. Do we include certified checks in outstanding checks? I'm not sure if you discussed this, but in case you discuss this, let's discuss it further. But in case you didn't, I don't think they will be asking this because this is usually asked during 114. Do we include certified checks in outstanding checks? No. Why? Because when we say certified checks, no, the bank already debits your account, no. So when you issue certified check or when a certified check is issued, the bank already debits your account. The bank will already decrease your account. And therefore, if the bank already reduced your account, it already debited your account, there's nothing to debit, no? Kasi kung nabawas na siya sa cash balance per bank, ano pang ibabawas mo? Inabawas na nga siya. Kaya, yung certified checks are not considered outstanding checks because the bank, from the time of issuance, already debited your account. I hope that's clear. Number 19, the amount reported as cash in a company's balance sheet should normally exclude letter A, post-dated checks that are received by the company. Cash mo ba yun, yung post-dated checks that are received by the company? No. No, which is why for this item, the answer is A. How about cash in payroll account? Cash in payroll account, payroll is you use it no in your operations for the payment of the salaries of your employees, for the wages of your employees. So cash in payroll account using operations that will be considered as cash. The same is true for your cash in, let's say, petty cash fund, cash in your um, for the payment of your interest, for the payment of your dividends, they are considered as cash. How about undelivered checks written and signed by the company? So in this item, you're the one who issued the. Actually, you're the one who um, who signed the check, but the check is left undelivered. Therefore, it's still your cash because you haven't delivered it. You haven't delivered the check. Therefore, it's your cash. Petty cash fund is mentioned, forms part of your cash. Number 20. Bank statements provide information about all of the following. Checks cleared during the period, of course, it will be reflected in your bank statement. B, error beats the company. Of course, the bank will not be able to know the errors that you committed. So the answer here is letter B. Of course, the bank statement will also reflect the NSF checks, their non-sufficient checks during the period, and the bank charges for the period. So how do we record the NSF check? So how do you record NSF check? So initially, when you collected the check, you debited cash, 'di ba? You debited cash in bank and then you credited AR. And later on, the bank notified you that the bank that the check is not supported by sufficient amount of cash. So you reverse this, no? You debit the CIB, you credit the AR. And later on, should it be sufficient na, should kung magkaroon na ng funding check, you will now be debiting AR and credit cash in bank. We're left with four items. Number 21. Bank reconciliation are normally prepared by an entity on a monthly basis to identify adjustments needed in the depositor's record and to determine bank errors, if any. Adjustments should be recorded by an entity for letter A, outstanding checks and deposit transit. Do we adjust for this? At least on our books, no? It says adjustments should be recorded by an entity. Do we record outstanding checks and deposit in transit? No. We only use outstanding checks and deposit in transit in reconciling. But based on our books, we already recorded this thing. So there's nothing to adjust from the cash balance per book, which is why the deposit in transit and outstanding checks, we adjust this, di ba, from cash balance per bank, not from book. Because this deposit in transit and outstanding checks have already been, how do you call this, are reflected in your books. Letter B, bank errors, outstanding check, and deposit in transit. No, no, because in case the bank committed error, it's the bank who should adjust, not you. Letter C, book errors, bank errors, deposit in transit, outstanding checks. Still not the correct answer. Letter D, all items exempt bank errors, outstanding checks, and deposit in transit. And these other items pertain to what? Your credit memos, debit memos, book errors. Meaning you only adjust your books for these three items, no? Cash, credit memos, debit memos, and book errors. So the answer for this is letter D. Number 22. Which of the following is not considered cash? Letter A, post-dated checks issued by the company. Yes, it's still your cash because it's post-dated, and you're the one who issued the check. B, checks to be mailed to suppliers. Checks to be mailed to suppliers, it pertains to undelivered checks, therefore still your cash. Coins and bills with the petty cash custodian, petty cash fund, still your cash. Post-dated checks received by the company, oops, it's post-dated checks received, therefore not cash. So the answer here is letter D. I'll no longer be explaining now because we discussed it earlier naman. Number 23. Which of the following asset is more likely be subject to fraud? As mentioned, cash is king. Cash is more vulnerable to theft. Therefore, the item most likely to be subject to fraud is also the most liquid item, your cash, letter D. 24, cash is characterized by, this question is usually asked for management advisory services. That's the another accounting subject. But for the sake of discussing, cash is characterized by, we know naman, no, na high liquidity yung cash, meaning pwede mo siyang magamit kahit saan, madali mo siyang magamit. You no longer need to do anything. Like for example, if you have cash and you want to buy something, you just pay the cash. No extra effort. Contrary to, for example, your PPE, it's not that liquid. Why? Because for you to be able to use that PPE, for example, if you want to buy something, you have to sell it first, for example, and then you pay cash using the proceeds, no? As general, although pwede din naman na PPE mismo ipangbenta mo. But in theory, cash is very liquid, no? You can easily use it whenever you need to use it. Since it is highly liquid, the concept here is low risk, low return. So kapag highly liquid siya, it's low risk. Why? Because in case you need money, in case there's unexpected disbursement or outflow that you need to pay, then cash you can use it right away, and therefore it's low risk. And therefore, if it's low risk, low return then. Kaya the correct answer here is high liquidity, low return. No? Letter C. Cash is highly liquid but low return. Highly liquid means low risk and low risk means low return. Kapag low liquid naman, Low liquidity, usually high risk yon, and if it's high risk, high return. So that ends the first part of this tutorial session. The second part will focus on short problems. We'll be right back in a while.